Hello, folks. Welcome to Market Trends. This is David Russell, Global Head of Market Strategy at TradeStation Group. It's great to be back with everybody. This is our first webinar in a couple weeks, and at least for Market Trends, we did State of the Market on Monday. And just show you a few disclosures. While I'm doing that, let me also tell you that TradeStation is preparing to launch Titan X, the next generation of our trading platform. It is not just a new model of our award-winning software, but a fresh trading paradigm that puts you in the cockpit like never before. TradeStation X will be available to customers as a beta soon. If you're new to TradeStation, you can join the waitlist at tradestation.com/Titan-X or see the link that I've shared in the comments. All right, those are my disclosures. Let me show you the standardized returns of some ETFs that we may be talking about. All right. So, on Monday, we talked about this kind of a need for the market to kind of just, sit and just do some time of waiting. We had some very tight minor pullbacks, and now it looks like I believe the S&P is hitting new all-time highs right now. So basically, last time we did this webinar, about 2 weeks ago, we talked about the tight range and the potential for a resolution to the upside, which is what we've seen. And essentially now we're entering an environment where the breadth is widening and we're seeing increased participation of some of the smaller kind of companies out there. So those are standardized returns. Let's start off by going over here to our key ETFs and show you some of the things happening in the market. Let's actually start by looking at the S&P 500. I think one of the things that's interesting to me, let's see now, that was the EFA. That's the global ETF. Look how that is not hitting highs, but the S&P currently is. We're close to it. Might be hitting new all-time high today. Anyway, the key thing is that we're in new half, new quarter, and some new things are happening. Today, I also want to tell you, if you go to tradestation.com, scroll down the homepage and look here. We have deals and doves this summer. This is our market trends. This is the blog that basically highlights the key things we're going to be talking about in our webinar today, if you want to check this out. And it kind of just points out that this is kind of, I think, the things that are emerging. Deal making, M&A, and potentially more dovish, or at least a dovish sort of expectation and vibe in terms of the Federal Reserve. These are the kind of catalysts we see here. And I think it's kind of shaping a lot of the way we're actually seeing the behavior here in the market. And I think this is something that we may see a continuation of for various reasons that we're going to be getting into. So last night we were looking at this sort of deals and doves, and then sure enough, as soon as I basically had gotten my article done, there was more deals with Kellogg, KLG getting acquired. Kellogg broke up into different entities, and one was snacks and one is cereals, but regardless, there's an M&A in KLG. And then MP, not a full takeover, but the government apparently bought a stake in this rare earths company. This is a new kind of market now. We have not really seen M&A be a real issue in a long time. We have not really seen value investing in a long time. We've not really seen even interest rate sensitivity really being something, kind of argument for a long time. And now we're starting to see those things emerge as new sorts of trends. We're starting to see strength in retailers. And I think as we kind of look at this environment, we might actually start to see things like retailers, biotechnology. I mean, look at Best Buy. I mean, just so many of these retailers out here, the XRT retail ETF, kind of outperforming today. These are companies that trade inexpensively. There's deals that I'm not going to predict anything, but this is the sort of area where people looking to do deals to say, I'm going to buy a company and I'm going to close this store and lay off these guys and do this thing or do that thing. This is the way deals are done. And they don't look at companies like NVIDIA as the target. They look at small beaten up companies that have been underperforming that they can get in there and make changes to. And it's a different kind of investing than we've really seen in many years. And it's not to say it's going to become the dominant theme in the market, but it is a theme that is now asserting itself in an increased way. Today, there was some kind of, I don't know what, in Hertz. I was looking, but there seemed to be some kind of speculation or news or something in HTZ. This rallied back here in April when Bill Ackman got involved and there's some, kind of movement in it today. So I think it's important to kind of realize that. Now, let's take a look over here at our key ETFs and just kind of see some of the things that are happening. One of the things I like to look at here is growth versus value and IWD versus IWF. Look in the last week. We've really seen, growth has dominated for a long time. IWF has outperformed the last 3 months, a 63-day period. On a year-to-date, they're about equal. But you can see here in the last week or so, the last day, IWD is starting to outperform. And that's kind of something, if this, let's see if this kind of thing has that potential to continue. Another thing I like to look at is the equal weighted. I don't know if I have it on this chart, but the equal weighted RSP versus I'm going to actually open MT breadth. Now, remember, if you go to the top of the blog, let me open this up. My computer is, there we go. All right, now if you go to the top of the blog here, we have a link to the zip file, and the zip file has the workspace. You go to the zip file, you open up the ELD files, which include the indicators, and then after you've done that, you can go and you import them into your TradeStation platform, and then you can open the workspaces, and that's what I'm doing now. So MT breadth will also show us some interesting things. But I think it's important just to realize here is that we are seeing the potential here for some widening of the market, people buying smaller companies. Let me hide myself again. And you can see here, for example, RSP, this is the equal weighted index. It's, all right, here we go. You can see today it's outperforming. I'm gonna get to that. But this is the sort of thing that has not been the case for a long time, but it can potentially assert itself. And we need to realize that M&A, things like more dovish policy, and some of the other things we've been seeing, value investing, these could be consistent with the kind of market. Look, in the last 10 days, RSP is outperforming. So over the long run, RSP has lagged. But if it does start to outperform, then we could see a process where the large mega cap growth, with just large growth stocks in general, just stall and people focus on small little companies that are moving. So we just realized that, in this webinar, we talk about market trends. What is happening in the market now? What are the kind of, things and patterns that seem to be asserting themselves? And one of the things right now that seems to be asserting itself is a shift to value, a shift to small companies, a shift to things like M&A, and opportunities like that. And that's going to be something that potentially creates, a little bit of just lack of interest in the NVIDIAs and the Microsofts of the world. So just kind of realize that here. Now let's just go back over here let's look at, well, first, I'll show you something here. This is on MT breadth. We have the advanced decline line, which you can see here is making a new all-time high. So that's the one of the things that kind of stood out to me on this chart, and I wanted to kind of show you. Now, we do have some other kind of indicators. I'm not going to open it all up, but this is an indicator I've shared with you guys. If you actually look here on this chart, you can see I have a thing down here called MA speed, and this is in the zip file. But basically, this shows the rate of change of in this case, the 50-day moving average. This speed, this rising 50-day, the actual rate of change was the highest since way back coming out of the pandemic. So it's kind of interesting just to realize here is that this thrust of the 50-day moving average turning up was very much kind of consistent with a kind of back from the dead sort of thing, a kind of rising from extreme negativity. So I think that's just an interesting sort of thing to realize that this was the fastest move in the 50-day moving average since June of 2020. Then that's one of the kind of custom things that you can only get here on Market Trends that we share in the workspace is that the moving average rate of change that we include. The other thing is that some of the ways we look at things based on sectors is go back here to key ETF, go to MT main and go to key ETFs. And what we can see here is we look at, say, something like, for example, the 10-day rate of the 10-day change, materials, XLB, XLI, XLE, XLY, XLK, those are all risk on cyclical. I mean, tech is kind of cyclical, because it's a growth area, but it's definitely not a risk off fear sort of thing. And then look at what's lagging. consumer staples, real estate, healthcare, utilities, mostly kind of lagging. Communications have fallen behind also because communications are not very cyclical. The economy can accelerate, and it's not necessarily going to really lift those companies. They are really secular growth stories. There's also some different things happening with possible competition for Alphabet. There's also some stuff with Netflix reports earnings soon, and so that might just kind of sit and wait. But XLC has kind of become the most sort of pure cyclical name, pure secular growth name out there, the communications, and it's just kind of sitting. But look at this stuff like materials, industrials. Now, materials, we have the tariffs on copper was lifting some of the metal stocks. We have the same with the rare earths, MP. This is the sort of thing that actually is a positive sort of thing for materials, industrial, small caps, banks. These are the sort of things when people want to get out the kind of smokestack, brick and mortar, real economy as opposed to growth, secular growth. This is the area where people focus, and it's what we're seeing now. So I think it's important to kind of realize that. So we really focus here on the nature, the mix of what's happening and what's performing, and we're seeing it here. And I think it's important to realize that this is what it's telling us. We're seeing the equal weighted outperform the smaller companies, the value, which includes industrials, financials, a lot. We are seeing, the cyclical stuff like industrials. All these sort of things are pointing in that direction. The people are now looking out and seeing a kind of stronger economy, or at least a kind of degree of stability. And there is also this growing sort of sense of potential interest rate cuts. Now, it's interesting if you actually look. Let's see. Those are the. All right, before I move on to that one, I also mentioned that if you look over here, the VIX yesterday fell to its lowest level since late February, when the whole kind of kerfluffle started with with tariffs and trade and all that sort of stuff. When all that drama started, you can see here the VIX is this level. We're basically now on the VIX back to where we were on February 20th, 21st kind of period when all the panic began. Also, it's interesting to look at 10-year Treasury yields here. I think it's very important because this really could be kind of just stalling. I mean, if you look, you can kind of see to a certain extent tried to rally and just kind of stalled and just petered out here. And this is potentially could be very interesting. Now, I think it's important to realize, and I think it's kind of unfair to Jerome Powell to bash him for not cutting rates, because remember what happened when he cut rates back in September? The 10-year Treasury yield shot higher. So there would be a risk here that if Powell just started cutting rates prematurely, that would not necessarily bring down mortgage rates and everything else. By waiting for a real sense of confidence that inflation is going to come down and we're not going to have a huge inflationary problem, it creates like quality rate cuts and not sugar high rate cuts that can actually down the road lead to a kind of 1970s Arthur Burns was his name, sorry, the Fed guy back then, who kind of infamous now for getting dovish too quickly and letting inflation come back. So I think it's important to realize that when the Fed cut aggressively, it pushed up yields. So I think it's a little bit important to realize here that in many ways, by delaying the rate cuts, especially with unemployment where it is and everything else, it can assure that the inflation actually is calming. And the fact is, the longer you wait to cut rates, in some ways, the better, because the thing is, it just leaves one more potential positive that can come off the bench and kind of add to the bullish case. So I think in some ways, what's happening here is something that's actually pretty interesting. Now, if you actually look at the Fed, the CME Fed Watch tool. This is July. Let's go to September. The September meeting. July is nothing. No one's expecting anything this month. But what's interesting here is you can see that basically, where's the thing I want to show? That at one point we had, I can't remember. Sorry, now this didn't do it. I'm going to just skip this. Basically, the thing is that it's coming back in. The idea of a September rate cut is getting more solidly kind of priced in. If you look a month ago, there was a change yesterday here. But the key thing is that now we're more solidly looking at a rate cut in September. That's the key thing. The Fed minutes yesterday were kind of a bunch of nothing, but the key thing is there was nothing in there that took September off the table. And I think that's the most important thing to realize is that as we move forward, September is getting more kind of clear. And the other thing that's important to realize is that China had a bunch of kind of um, of deflationary news. And the other thing that's out here is, despite what we're seeing in metals, which are not that important for inflation, let's just look here at crude oil, because OPEC increased production. They're going to allegedly, reportedly increase production again. We had inventory builds this week. And if you look at oil here, this could be something, I think, if we look at this on like the weekly chart of crude oil here, this is not necessarily, long term, the most bullish chart you've ever seen. It's kind of in this range, and the fact is, it went up to the top and it got rejected pretty hard up there at 76. You can see here the daily chart, and then you can see on the weekly chart. So, in this range, people might be looking here for something of a push to the downside here. And this whole thing, which this was caused by that disruption in the Middle East. Well, if now we get back to this, when was it? June. Yeah, anyway, this sort of thing, as this kind of works its way out, and kind of as we move on from that kind of crisis scenario, and we realize that China is kind of limping along and OPEC's increasing production, we can be sitting in a situation here where, interest rates, or oil prices can potentially move down, and that can have potentially positive impact on interest rates. So the dovish scenario is also coming together. We said deal making and dovishness. These are the things that I think people need to think about this summer. Now, earnings season will be coming soon, but this is the sort of market trends we're seeing right now. All right, that was these are some of the things I was talking about. There was some more just M&A stuff with some of it was closely held. Private companies like OpenAI purchased Johnny Ives. He's the guy who did the iPhone way back, when it was created. That was a deal that OpenAI did. It was a private deal, but it was still $6.5 billion. Alphabet bought a company called Wiz for $32 billion. Cloud security. These are private, but also it's deal making. Merck acquired VRNA for $10 billion. There's the thing of Kellogg, the thing with MP Materials. So these are the sort of things we're talking about. And like we said, regional banks, small caps, biotech, retail. These are the sort of areas where people might start to also look and to continue seeing this sort of potential deal making sort of vibe. And then I look overall, today was interesting to look at the jobless claims. They were lower than expected, but continuing claims continue to rise. Last week's non-farm payroll showed wages coming down. Unemployment was lower than expected. But again, the quality of the job growth is in non-cyclical areas. And, I don't know much about politics and things like Medicaid and all that stuff, but if you look at it, if there are certain knock-on effects here of the big beautiful bill or whatever, and there are certain cuts of potentially things like Medicaid and certain things like that, or the Supreme Court just allowing Trump to cut government jobs and things. Some of these developments we've seen from Washington could also result in weaker job growth. So we could see, for example, if there are certain Medicaid cuts and stuff, healthcare has been the driver and one of the strongest things in this job market, and that could start to potentially be at risk. Same thing with, if there's more government cuts, the way that sort of thing might work out. So we could be in a spot here now where, job cuts are not overall positive. They can be a positive for the stock market, because now if the Fed starts to see pressure on the job market, then that's going to be one more thing, the bullish, the dovish sort of scenario. So we could be setting up here where Goldilocks is kind of still coming out of the ashes of this, like a phoenix rising from the ashes of this whole trade war first half drama. We actually see coming out of it a weaker job market, lower inflation, and a solid AI investment plus deal making, plus banks with passing their stress test, doing increased dividends, increased Wall Street activity, different kind of market, but something they can still continue to kind of deliver positive returns in a lot of ways. And then I think the question is, does this trickle through into the housing market? And I think that's something to realize here, because if interest rates work their way down, housing has really taken a hit for a long time here. Look at trying to remember this, just look at some of the individual names like Lennar, BLDR. So these are some of the names that have really struggled for a long time. as rates moved higher. And look at like the weekly chart here of Lennar. It's back to where it was in late 2023. So, I mean, this is a spot here where if rates move down from here, there are like falling home prices and there's going to be competition with existing and everything else. But these companies trade at low multiples. And if, people are starting to look for this theme to come together, there is an argument to think that the home builders long-term are not in a good position here. They are going to potentially face significant existing home sale competition and falling prices. Nonetheless, for a period of a few months, this could be something people look to if rates move down. So maybe what happens is home builders perform into a rate cut in September. Another thing to remember is not next week, but the following week, I'm pretty sure, I haven't looked at the calendar, but we almost always get the week after CPI, we get, and it's definitely coming this month. You can check the calendar, but we get a slug of housing data. We get NAHB, home builder sentiment. We get building permits, and we get housing starts. So those things together, there were days, and this hasn't been for a while, but when there have been times in the market when just the release of that data alone has been a positive for home builder stocks. So I think it's important to realize these guys have really taken a pullback. These charts all look the same: Lennar, DR Horton, DHI. So I think it's something important to realize. Now, today, if you look at TradingView, TradeStation's TradingView page, we do these ideas here, and we did an idea on Zillow. So I want to just kind of point that one out because Zillow is a stock that at times has really performed, for housing. I mean, it can be extremely volatile, but I mean, for people looking, maybe, if people think, home builders not exactly an active trading stock. I want something it's a fast moving, kind of more like a tech stock. Well, that's what Zillow can behave like. So I want to point out Z is the main ticker on that. It also says ZG. What's really interesting to me is if you look here on our TradingView idea, this thing basically had an extremely tight Bollinger Band compression. If you actually look at this here, so if you put on Bollinger Band compression, Bollinger Band width, which is what we have down here. It's on TradeStation as well. It was very tight. It's hugging that 200-day moving average. It broke above this level from back here in April. Z is a name I just wanted to kind of mention. But the housing thing, I think we have to kind of have on our radar. And so I definitely want to mention that. There are some others as well. There are some other names that I don't know very well. They're more speculative. They're smaller. But stocks like Open and OPAD, these are extremely volatile, but these are also housing related. They essentially do things with people finding, remodeling, and flipping houses and stuff like that. I mean, you can look at them, but if we get thematic here and people are saying, housing's coming back, and you look at some of these things that are down like 90% in the last 24 months, that can be the sort of thing that can perform for a period of a few weeks or a few months. And I think let's just think about that. If the word out there is, if the expectation and the buzz and the narrative is rate cut in September, the thing we could see is potentially we could see that manifest itself in housing upside into that September Fed meeting. And then after, sell the news. So buy the rumor, sell the news. Let's just kind of think about how these things can kind of work out. Also, Bitcoin hit a new high today. I'm not really getting into it that much, but some of the crypto stocks have been coming to life as well. You might want to kind of take a look at some of those. All right, so those are some of the things that were happening here. Now, I had to mention, this is Delta Airlines today. Also, we saw the outlook. This is actually very interesting because this is an industrial stock. It's a cyclical stock. And, if we get back to an environment where the airlines and travel and transports are working, that can have all kinds of other implications for consumer discretionary and things like that, and services and everything else. So I think it's important to realize here that this Delta thing was actually a pretty big deal. And airlines have been really, if you look at, UAL, the big airlines, ZAL, UAL, AAL, they've been, just kind of stuck in this range. And we could be looking now at the potential beginning of some breakouts in these names. So I want to mention that. Okay. Also, I want to show you very quickly, earnings season starts next week at the big financials. Let's jump over here to this other tool I want to show you just kind of as a quick little lesson on TradeStation. We have actual instructions on how to do this in the in today's rundown. If you actually look at the rundown, You look down at the bottom, using the platform earnings. Sometimes we like to put in a little section here, giving you some kind of guidance on how to get the most out of TradeStation's award-winning platform. If you go to data and you go, all right, so I have this in the actual workspace that I've actually shared with you. If you go to MT main and then you go to earnings date sub tab, I'm going to go over here and I'm going to go and I'm going to add S&P 500 index. Now you can also do this if you're on another, if you're like, say for example, I have this radar screen here. There's a different tab of the radar screen, or a different page as it's called. I go to studies, I go to add study, and then I would go to the actual indicator, which is called next earnings date RS for radar screen. It's slowly coming up. The one that is used for the chart study is called something else. It's called next earnings date studies, next earnings date. I know it's not the most elegant name, but it is what we have. So next earnings date here. This is in radar screen, and you can see it has this different logo, this different little symbol there, and you go and add that, and then it will basically bring in the earnings calendar. I have it on my chart right here. And this is what it looks like if you actually you go to studies and go to add next earnings date studies, next earnings date, as we highlight here. I give instructions on how to move it around. I've moved it to the right. I made the font bigger. It's a little bit different to mess with, to edit or change. You go to edit text, and then wait a second. I'm sorry. You go to edit text, and then you go to the customize, and then if you want to move it around, you go to inputs, and you can do distance from right, distance from bottom, the colors, and then the font size is what I changed. The other thing is that this will highlight. So if you look at a stock that reports soon, like I think Wells Fargo reports soon, it should highlight like an orange to actually show that the earnings are about to come up. You can see that. So that's the threshold that you set in there as well. So it's some nice little things to actually look at. And I want you to remind people, this is here. It's an incredibly powerful sort of thing to have. Now we go back to earnings dates. One of the things that I like to do is I like to actually look at the companies in terms of when they, how much they trade, how many options they trade. This is not populated yet, but this includes average option volume, which is one of the indicators that we share with you guys in the ELD file that is used by the workspace when you open it. And so I want to just kind of point this out, because the thing about this is that it allows you to sort and see the most active. You can also sort by market cap. Now, I'm asking it to pull a lot of data very quickly, and it's at this point kind of going slowly. So this is kind of overall what I wanted to show you. But if you look at this, you can now sort by days, and it will show you the companies coming up. You can see here, if you sort by days, see all these data is populating. But this is the way you do it. If you use the workspace I share with you, you just go to data, and then you can import add symbol list, and it'll work like that. So these are just some of the tools that we have. I wanted to kind of share with you guys. Before I leave, I want to mention one other thing, which is that let's take a look at silver again, because the dollar is in an interesting spot here, and I'm just trying to figure out what to think of the dollar. This is a trading view, but let's look at DXY. Look at the weekly here of this. And, this is not showing any really clear sign of a turnaround. And, it's possible that the dollar, there's parts of me that think that there's reason to look for the dollar to bottom here and not to just keep going down. But the thing is that, it is kind of stuck below this level from last week, Friday the 13th of June. You can look right there. You can see the dollar index, DXY, is under that level. And, there might be some potential upside in this. But the thing is, if the dollar just remains weak like this, I'm kind of looking to, potentially for, something, for some potential strength, maybe in something like silver. I think it's important to realize here that silver is consolidating. This is silver futures SI. It's consolidating above the level back here from October. And let's look on the weekly chart, because you can see here that essentially this is the level from October that it's holding on the weekly. But you can see we've now cleared levels going all the way back, to like the pandemic era. And we're really back here to levels that we last saw in 2013. So the thing is that silver is more of an industrial metal. And if you're seeing things like copper, rare earths, and all that stuff, you're seeing steel makers and there's a lot of metal related stocks that are kind of moving. One of them is this company AZZ that I want to just, this is one that I look at sometimes. They do they do like coating. When you look at a piece of metal and it has that kind of shiny coating on it, like you see inside the hydraulic of like of a piece of heavy machinery. This is what they do. They do a lot of that kind of coating of stuff. But the thing is that when people are building stuff out of metal, they use companies like AZZ. Now, there's some kind of strong earnings report today, but I want to just kind of point that out, that there is a trend here of metals and stuff like that. There's been these things with steel tariffs and everything else, and however you look at it. But the fact is that a move in metals, especially more of the industrial metals, less of things like gold and silver, this could be something that actually, causes some interest here in silver. So I think silver is an industrial metal. We want to kind of look at that. And then one of the names I'm looking at right now, I wanted to just mention, was Wheat and Precious Metals, WPM. This company here is an interesting sort of pattern sitting at that 50-day moving average. Look at how it's holding this level from back here on 86 from April 21st. You can see this line here. It was really a high April 21st, and again on May 9th, and again in late May around the 25th, the 23rd through the kind of 29th, 30th. That was a resistance line, and look at how it's holding it now. 50-day moving average at the bottom. It came down and held the bottom of the Keltner channel. So I want to just kind of point that out in case things start to happen, with silver. I think we're going to keep it on our list. So those are the main things I want to talk to you guys. Say we will be back for state of the market on Monday. That's when we look specifically at the indexes, the sectors. We really look at them using weekly charts. So look forward to seeing you guys then. And in the meantime, don't forget to check out the downloads, the zip file we share, and see you guys on Monday. Have a great weekend.